But I think it was around 2016 that we were really starting to see sort of corporate desires to fundamentally overhaul Bitcoin. I'm sure you can find the slide deck somewhere. They were explicitly saying is like, we're firing the old devs and hiring new devs. Running a node actually started to mean something. It's like, if I want this real certainty that I was here in Bitcoin for, if I actually want that, I have to allow my actions to conform to my words and actually run a node so that I'm running the numbers and truly auditing the network and not just assuming, not just passing the buck to someone else. In many ways, I don't really see myself as having been, the most correct. I don't think like it was like, oh, my side won out because we were right or whatever. I think it was more like I wasn't wrong, such that I stuck with what I think is sort of the winning strategy with Bitcoin, which is betting on the side of backwards compatibility because of what that represents for being able to engage with a monetary network.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey, everybody. Welcome back to the Bitcoin Frontier podcast. This week I have on Bitstein. Bitstein, welcome.
Howdy. Thank you so much for having me.
Absolutely. Glad to have you here. Let's start off with some Bitcoin history. So people may not know about this, but we had from 2015 to 2017 the block size war. Can you maybe recap what happened and from your perspective explain like why was it important?
Yeah, from my perspective, it really wasn't much of a war. It's people make it much more dramatic than it actually was. From my vantage point as a humble pleb, I was just getting online and seeing a lot of people wanting to change Bitcoin in a way that assumed a sort of centralized control over Bitcoin, such that any group of corporations or miners or whatever could choose to just fundamentally change Bitcoin, which I opposed. And also a lot of people just making really bad claims about Bitcoin, whether bad technical claims or bad rhetoric. And so I was humbly getting on Twitter and just speaking my mind about these things. And that was the sort of role I played. So, at the same time, maybe that just reveals my own, lack of importance at the time or something. But it didn't really feel like a war as a pleb. Yeah, I mean, the whole thing went back way before 2015. There was always questions about what the future of Bitcoin would hold, and what it would mean to scale Bitcoin. I myself, early on, I thought that we would increase the block size limit. I didn't understand why there would need to be a block size limit in the future, because we could just, if we need more transactions, we could get more transactions in. And I think a lot of people actually had that position for a long time. But as time went on, you learn more about how Bitcoin works. You learn that some of your assumptions don't really hold. So, over time, I became, less. I didn't see as much of a need to view transaction throughput as the number one priority. But there also something that I think is important around the whole history back then is a lot of the things that we know about Bitcoin today, because, over time you learn, cannot be like, we take them for granted today, but we didn't really know as much about it in the past. So in 2015, when we were having these discussions, there really wasn't as much understanding of even just the concept of a hard fork versus a soft fork. There was basically, there was a sense of wanting some kind of backwards compatibility. But those specific that specific way of differentiating different types of changing Bitcoin were not really thoroughly understood. I don't even know if it had really entered the lexicon in a broad sense, even as late as 2015. I don't remember exactly when that sort of entered the broader lexicon. So there wasn't as much of a strong argument for keeping Bitcoin, as it was in a particular way then. And I think it was actually, SegWit being announced later on as a soft fork that led me to better understanding the difference about it. Is like, why is it such a big deal that it can be a so-called soft fork rather than a hard fork? And something that was interesting back then was there was actually a conservative position that Bitcoin would remain the same as it is by increasing the block size, because it was assumed that the default sort of economic state, or the default way the economy functioned, was that we didn't have a real transaction limit, because the block size limit was there, but the actual blocks in practice were nowhere near 1 megabyte. So because we weren't there yet, the idea was that the block size limit was not restricting. It wasn't actually restricting what transactions could go in a block, because pretty much all the transactions could go in a block that wanted to go in. So instead, the idea, there was a conservative idea at the time that you would increase the block size limit to sort of retain that. So as the market grew and more transactions would be in a block, you would increase the block size limit to mitigate that. So it'd be sort of, you'd have the block size limit as this thing that's far in advance of what you actually need. So you get the basic, denial of service defenses, but not in a way that's restricting transactions. And that's actually sort of an interesting position that I think has been kind of lost to the history of Bitcoin. Not that I agree with it, quite the opposite. But that's sort of forgotten that was thought by many to be a type of conservative opinion that was being thrown around when there was all the different BIPs that people had around different techniques we could use to scale things. And I think this really highlighted an issue in all of these debates of, are you trying to conserve expectations, or are you trying to conserve reality? And so if you were trying to conserve expectations, then that sort of position of keeping the block size moving along makes sense. But as we learned more about the concept of a hard fork or soft fork, at least in my neck of the woods, maybe there was, there's a whole bunch of Bitcoiners out there, and I can't speak for everyone, only my own little corner of the universe. As you learn more, you start to realize it's like, actually, but the conservation of reality as it stands, despite the fact that it would be a sort of new thing to deal with full blocks, is to keep the block size limit as it is, because of the fact that to remove it in any way, which I should actually clarify, because we did change the block size limit, sort of, but to change it in the way that was being talked about and desired by most of the people agitating for big blocks, that required a hard fork, which requires a fundamentally different way of imposing a change onto the network as a whole, which does change the reality. In a sense, every hard fork is a new currency, because it is a new set of rules, as opposed to restricting rules that already exist, such that you don't technically need to upgrade if you don't want to. You just won't be able to interact as fully as maybe you think you can. And so I don't know. There's just some kind of interesting things that existed at the time. by 2016 is when I can recall, this has been it's a very long time ago now. I feel like an old man. It's actually hard to remember the exact, timeline and everything. But I think it was around 2016 that we were really starting to see sort of corporate desires to fundamentally overhaul Bitcoin. So the biggest example I can give is the pushing of Bitcoin XT, especially by Coinbase. So Bitcoin XT was basically a fork of Bitcoin Core being led by Gavin Andreessen and Mike Hearn, and it was going to include various block size changes and all of that. But the other idea that was being pushed by Coinbase, I'm sure you can find the slide deck somewhere. They were explicitly saying is like, we're firing the old devs and hiring new devs, and that's cool on a individual basis. Coinbase is more than free to hire or fire or pay people to leave, as they've done before. They can do whatever they want with their own devs, but you cannot make those claims about Bitcoin development as a whole. It is permissionless, and you do not get to decide who to hire and fire for an entire network. Only, your own project. And so the fact that they viewed that as permissible, it was definitely some souring with Coinbase. Coinbase, for those who are newer here, you wouldn't remember that Brian Armstrong used to tweet things about how altcoins and Ripple and stuff like that were all distractions, and we should focus on Bitcoin. You'd be shocked to hear such a thing from them now. So this was definitely some early souring of the sort of general perception by many Bitcoiners, especially sort of hardline Bitcoiners, towards Coinbase and other corporate entities that were sort of taking on the same positioning. There were a lot of corporations that, for the sake of their business, they wanted a higher transaction throughput because it made maybe engineering easier, or it allowed for a business model that they wanted in particular. But that was putting their own business model ahead of the sort of, the health of the network and the maintenance of a consensus and all of that sort of stuff sort of ahead of it. And I think a lot of us had the position that's, Bitcoin is more important than your business. And your business has to conform to Bitcoin rather than the other way around, because Bitcoin is not meant to be subservient to any one organization. And so when you take the other position of your business model is more important, now that can lead to very interesting developments. You would have the incentive to want to produce code that you can present to the community, and maybe others would want to adopt. But that's not that you can't, once again, you can't make that claim for the network as a whole. You don't get to usurp that kind of power, or even try to claim that sort of power. And so that went on for a bit. And then along with all of this, there was all of the altcoin stuff going on. So there was a lot of an altcoin craze. Ethereum had quite the run in 2016, and there was lots of talks of flippenings and all of that. What people think of with the block size war, I think, generally speaking, tends to be actually sort of the end of 2017 more than anything. And it doesn't really include a lot of that other stuff. And, with that, it really boiled down, I think, to the no 2x or SegWit 2x thing. There was the New York Agreement, where many corporate entities, including miners and other companies, got together and tried to make some kind of agreement about what the future of Bitcoin would be. And the rest of us, plebs, just kind of laughed at that, because it's like, you don't get to determine these things for me. And they had determined, we'll do this, SegWit 2x, or we'll allow SegWit but then we will increase the block size 2x. And what ended up happening was that SegWit was activated, although it was activated not at the behest of any corporation, nor at the behest of Bitcoin devs. In fact, many of the core devs were not too happy with the activation method of the user activated soft fork. But instead, it went through because there was sort of enough of a basically pleb alliance of people running nodes and ready to sort of stick their place a stake, make a stake. But so anyway, after that, then there was the whole no 2x is like, yeah, but we're not going to actually like raise the block size. We're not going to do this hard forking, and in fact, there's the code for SegWit 2x, and despite the fact that 90% of miners and many very large corporations relative to the Bitcoin space were in favor of this, the actual development came down to basically one guy, and it was not exactly well tested, and the market response to it was such that it had kind of given up before it even launched. But then when the actual SegWit 2x code was launched, it died right out the gate. There was an off by one error. So these people were willing to put the entire network at stake to completely fail right then on the spot, all for a little block size increase. And that really highlights many dangers of hard forking, especially when you don't test it. So and it was not until this. So Bitcoin Cash had already forked off, and when it forked off, it kind of did it to little fanfare. This was after, so SegWit 2x, that was supposed to be in November. The actual activation, as a lot of people would know, would be August 1st, 2017. And that was when SegWit, so when SegWit got activated. Bitcoin Cash, as a response to that, forked off. It's like, we're going to be Bitcoin without SegWit. And because of that, because of the way that they were, rejecting SegWit, it created a hard fork. And but it was to very little fanfare, and it didn't really gain it until especially after SegWit 2x failed, and that was when people like Roger Ver, who had been very much in favor of big blocks, as many people know, that was when he actually started supporting something other than Bitcoin so vehemently, because it was clear that Bitcoin was choosing not to, make these arbitrary changes and these arbitrary fundamental changes to the way that the consensus was built. I think what is important is, why is it important? In many ways, I don't really see myself as having been, the most correct. I don't think it was like, oh, my side won out because we were right or whatever. I think it was more like I wasn't wrong.
In this frontier moment, Bitstein is recapping the block size war and various Bitcoin hard forks. Let's look back at the three most popular hard forks and see how they performed. One is Bitcoin Cash. It forked on August 1st, 2017, and was the first major split from Bitcoin. It increased the block size limit to 8 megabytes to allow for more transactions to be included in each block. 2, Bitcoin Gold. It forked on October 24th, 2017, and changed the mining algorithm to something called Equihash, which aimed to bring mining back to GPUs instead of ASICs. And 3, Bitcoin SV. It forked on November 15th, 2018 from Bitcoin Cash and increased the block size limit to 128 megabytes. Today, all of these forks trade for less than 0.01 BTC, down more than 99%. And now back to Bitstein.
Such that I stuck with what I think is sort of the winning strategy with Bitcoin, which is betting on the side of backwards compatibility, because of what that represents for being able to engage with a monetary network. When you put your money away in savings, especially when you're kind of putting gold in a vault for generations to come, you need something that is going to be there. And a hard fork, like I said, it basically creates a new currency. And when you do that, you are not relying on mere proof of work anymore to have a true consensus around things. You're introducing political variables, and that makes it less certain about what the future of that money is. So, when you put that money in a vault, you want to be able to come out of that vault and know what it means without having to engage in politics. You want apolitical money because that's the one that you can trust to be what it is for the longest term. So it's a very rational thing to be so wedded to backwards compatibility.
Yeah, very well said. I'm curious to hear your perspective on this. Do you think that we will see future Bitcoin fork wars, whether that's on privacy or scalability again, or something else? Do you see that happening at all?
So I had a tweet many years ago. It was probably at the height of the ICO stuff, which was around the same time, in 2017, 2018. And I basically just said, if you can't print money, you will print money, or if people can't print money, they will print money. And with that in mind, it's you're always going to have some malcontent who does not like the consensus as it is and the restrictions that it places on them, because as a global decentralized system, Bitcoin will always have a limitation that is too much for someone who wants something, whether that's a particular way of doing privacy, whether that's not having as many units as they think there should be because they want more, whether that's having the transaction throughput you want. There's no end to the things you could want. So I could imagine there being a lot of people continually being discontented with these limitations of the Bitcoin network, and to the point where they see an opportunity to create a new currency that forks off of Bitcoin and try to promote that in the world. But I broadly speaking view those as destined to fail because it's once you hard fork, you've sort of opened Pandora's box. And to me, it kind of represents this, it's a slippery slope of you do that, and then 3 steps later, it's like, okay, now there's no more 21 million. So it's like the things that hold Bitcoin together as an operational system are very important, and to even give the possibility of them being put into jeopardy is just extremely dangerous. Some people might make some money in the process. Others might make money off selling the forks, but I can imagine people doing that. Something I should have mentioned, what is important about the block size war, that actually just made me remember. I would say one of the biggest lessons, and it was definitely one that I personally learned, was the importance of running a node. That became, there was a lot of memes going back on both sides about, it's like, well, I want to run a node on my Raspberry Pi, and others thought it was ridiculous to think your Raspberry Pi means anything. Now, I don't recommend people actually use Raspberry Pi for their node. A node is much too important for such a flimsy computer. You should get like a proper mini PC or whatever you need for that. But respect the node. Give it a good home. But before then, I mean, I had run Bitcoin nodes, and but it was kind of like this. It was it almost felt like a cool party trick, and it was always easier to just open up Electrum and use various light wallets. But because of the threats being put out by the specter of hard forks and the dangers that they represent, such as being unsure about inflation occurring on the network, and being unsure that money is not being double spent, even if it's not your own. These things couldn't actually fully be handled by just looking at an SPV client, like a light client. So running a node actually started to mean something. It's like, if I want this real certainty that I was here in Bitcoin for, if I actually want that, I have to, allow my actions to conform to my words and actually run a node so that I'm running the numbers and truly auditing the network, and not just assuming, not just passing the buck to someone else. It's up to you to take responsibility of your own money. And so by the end of the whole block size war, I went from being someone who was, mostly kind of not anti-node, but ambivalent, like, you don't really need to run a node, to someone who is much more militantly in favor of the importance of running a node. And I do recommend any listener, if you start off not running a node, that's fine. As you get into your Bitcoin, journey, and you start to value your Bitcoin more, I think you're naturally going to become much more defensive of it. And it's that desire to be defensive, such as when people are threatening the very fundamentals of your currency, that you'll start to want to run a node, and you'll understand and appreciate how amazing it is that you can get an old laptop and throw Bitcoin Core on it and run it, and actually be certain of your entire, net worth and all of that.
Yeah, I definitely agree about the importance of running a full node. Is there any scenario in which Bitstein would consider choosing a hard fork, like, 50 years or 100 years down the line? Is there a certain hard fork that you would support, or you would have to support, or are you like permanently like, this is what I'm running and I'm not going to change it for anything?
So I think there's going to be times where I think a Bitcoin hard fork is going to be necessary. So I believe it's in the year 2038 or so. Or I forget which year it is exactly. No, sorry, not 2038. Anyway, there's a thing called the Unix timestamp is used in blocks, and eventually the way that Unix timestamps are constructed, it'll basically like run out in terms of like on the blocks, and that would totally wreck Bitcoin. Like Bitcoin would grind to a halt as soon as that happened. And so you would need to, and the only way to change it that we're aware of at the moment is to hard fork and change how we use that field in the block. But this is a very special kind of hard fork, because this is existential, and I think that's the clear thing. So what does that mean for this kind of fork? One, we do have time. With this particular one, we know we have time. Now, there's another possibility where you have some break in the cryptography that happens tomorrow, in which case, you don't have time to prepare and you have to scramble. And but this one is this is a great example of a I don't know, like good hard fork, because of the fact it's deep in the future, so we have a long time to think about it. Which also means by then I am not a computer wizard enough to come up with a potential soft fork thing. Maybe there's someone out there who will figure out some magical way of making a soft fork that handles this entire bug. In that meantime, in which case we don't have to hard fork at all. But even if we do, the actual hard fork necessary is a rather simple one, I believe. And so I could imagine what would happen is in a few years, people would start to, it's like, hey, the clock's ticking, let's start preparing. So what they would do is start a patch on the Bitcoin core code that does only the thing that fixes this and nothing else. And so it's literally just, a couple patch files that have these tiny code changes that fix everything. But it does represent a fundamental hard fork. And what those people would do, what everyone would do, is start maintaining that against every single release of the Bitcoin code. So that's always being worked on. It's always tested in the background, et cetera, et cetera. And what this would allow is a lot of time for people to get comfortable with what needs to happen. And you have a lot of time to prepare for this sort of, millennial event of sorts. And when we get there, what I would expect to happen is people run two nodes. They run one with the old code, one with the new code, with the small patch applied, and they sit and they wait. And when that moment comes, they watch. And when one of them completely breaks and the other is still going, everyone has a built-in shelling point already around that new patch, such that I think it would be successful without too many of the downsides that we think of with regards to hard forks. So that is about the most conservative hard fork I can imagine. And because it's existential, I have no choice but to choose it, because I prefer Bitcoin existing over not existing more than I care about backwards compatibility. Whereas every other hard fork, it hasn't been an existential thing. It's just man, wouldn't it be nice if we had more transactions? Yeah, of course it would be. But we also have to, send this data all around the world to be verified, validated, and so on and so forth. And so this is just not an appropriate trade-off.
Would you say that this kind of whole conversation really highlights the anti-fragility of Bitcoin, in the sense that its core rules are very difficult to change in a non-backwards compatible manner? Yet if something crazy happens and Bitcoin needs to change quickly in an urgent way, and it's an existential threat, then Bitcoin is able to evolve and change?
Yeah, I think that's an interesting way of putting it. I hesitate slightly, just because I could probably come up with all kinds of arguments for and against this. But effectively, yes. I mean, I think I agree with the basic point. It's extremely sort of hyper conservative in terms of maintaining itself, because that is what makes a good strong money. But at the same time, yes, it has, because people value it in that way, there is the sort of will with everyone involved. I mean, the reason that they demand backwards compatibility and such, and among many other features, is because they want to protect the value of their money. And so when the value of their money depends on some other change, with incontrovertible in an incontrovertible way. So with transaction throughput increases, like the block size limit, it's there's controversy around that, just in the sense that people have their disagreements. But when it comes to something like this, where it's incontrovertible and it's you either have this system or you don't, and people value having the system, then yes, I think that it would be very easy to change. At the same time, it's almost not easy to change, even in this, because we want to talk about such a change many decades in advance, even though it's this trivial thing. So the difficult part is getting the shelling point built around it. I think it's interesting because other coins have managed to do, quote, successful hard forks. And, Ethereum being a great example of this. And from some perspective, they could see that as a win, but Bitcoiners view it as a loss, because it means that there's a bit of a there's issues of centralization, and in a sense, it's almost like there's not enough enemies in Ethereum, whereas in Bitcoin, there's so many people who are using money in for their own needs, and they have their own desires and interests, and you have all these factions. It makes it more difficult, and so it takes a long time to build that Schelling point, and that's actually a good thing, because you want a money that's able to entice enemies, rather than one who's just like everyone's part of this big club, and we'll just go along with stuff.
This episode is sponsored by Sound Advisory, an Unchained affiliate. If you can't talk about your Bitcoin wealth with your financial advisor, it might be time to find a new advisor. Sound Advisory is a leading financial advisory firm for long-term Bitcoin holders like yourself. If you need help optimizing taxes, establishing goals, creating a distribution plan for Bitcoin wealth, or designing estate and inheritance plans, then check out Sound Advisory at thesoundadvisory.com for more information. That's thesoundadvisory.com. Now back to the show.
I don't know if that helped, but
yeah, no, that was great. Another kind of topic that I think people have been talking about is like future soft forks, whether that's for scalability or privacy. And like some people are on like team ossification and whatever, that might mean to whoever's speaking. And then other people might say like, hey, like Bitcoin is not a complete project whatsoever, and we need to keep improving it. I'm curious, where are you on that spectrum? Do you think that Bitcoin is like, should ossify or should ossify soon? Or do you think that there are many upgrades or changes that should be made to Bitcoin that may be, backwards compatible?
I think that it depends on the day. But no, I mean, I think my position over the years has generally been one of, gratitude for what we have, and an appreciation if things can get better. So, I was not like an immediate fanboy of SegWit. In part, it took me time to understand what it was that it was even doing, because it's, it can get, rather technical to understand, how does this fork even work? What does SegWit even solve? And that's a whole other thing that maybe you should have you could have a whole history on that whole debate, and like, what were we even trying to solve in the first place there? But in any case, like, I wasn't necessarily like a fanboy at first. It took me time to learn about it, and then come around. And even then, it was like a feeling of, if it gets added, cool. If it doesn't, I like Bitcoin as it is. So, that'll be fine too. And that's kind of been my position forever. So it's like, I'm cool with ossification in a sense, in the sense that wherever Bitcoin is today, if that's all that we get and we get this forever, that's amazing. But if people come up with an incredible thing, I can't predict the future, and I don't know what kind of bugs are going to pop up. There might even be, more bugs that exist in the code base today that need to be cleaned up that we just haven't noticed yet. We've had many inflation bugs that took a long time to identify. So, for instance, there was the one just a few years ago that could have resulted in bad inflation, and I believe even effectively a hard fork. But it was caught ahead of time before it was ever like exploited, about a year after going into production. And that would have been very bad if that hadn't been caught. Another one that got caught, there's BIP 42, which is my very favorite BIP, where it was found that the halving process, when it got to the end, would reset. And so effectively, Bitcoin was set to, in the long run, have an infinite amount of units, And that required putting an explicit stop to the halvings after the expected amount. And that's an inflation bug. And I'm so grateful for, our descendants many hundreds of years from now. I'm glad that they don't have to deal with that anymore, and I don't have to have that concern that I wouldn't have even known about on my own, because I wasn't in there every day thinking about bitwise functions. So with that in mind, is like I don't know the future, and if people come up with cool, interesting things, I don't want to set myself up as someone who's inherently against it. And I think another aspect of this is I've always thought of ossification not as a literal thing that you advocate for, but perhaps more of an emergent property of Bitcoin as it grows, because you continue to have more conflicted parties trying to use this system, such that it makes it harder to find agreement with them as to what should be added. When you go back to the very beginning of Bitcoin, Satoshi was just throwing stuff in. In fact, the block size limit itself was thrown in a commit that had nothing to do with it. It was a very underhanded soft fork, and it went in, and we were stuck with it. Whether you like it or not, we became stuck with it. And he even had his idea of you could deactivate it this way. It's turns out no, because then you'd be hard forking, and that comes with this can of worms that you're opening. So when you had a small group of people using it, like with Ethereum and early Bitcoin, you can get away with making drastic changes, and you can even get everyone to go along with it. But as the network grows and you have more competing interests, it becomes harder to find that kind of consensus in a sort of social sense among all of the different parties, whether it's miners, developers, users, investors, and then factions within all of those, and so on and so forth. My favorite way of illustrating this on Twitter was using the Mexican standoff imagery, specifically from Reservoir Dogs, where you have multiple guys pointing guns at one another. It's like, this is Bitcoin governance. And what we have to deal with. And when you add more and more people with guns all pointing at one another, or you get the Spider-Man meme pointing at each other, it becomes much more difficult to change. And that's sort of, de facto ossification. And so I've also, over the years, thought of it more in terms of that. It's not something that I come in and declare it's oh, we're now ossified, because I don't know, I might even change my mind because someone comes up with something so amazing that I want it. But instead, a recognition that over time, even if I like something, that doesn't guarantee that everyone else on the network is going to like it too.
Yeah, no, I think those are really great points. I kind of want to shift to a different kind of topic for a split second. Why do you think institutions like the Mises Institute are not just loud, massive proponents of Bitcoin? They seem to kind of entertain the idea and maybe host Bitcoin debates, talk about it a little bit, but they're not full-flown, Bitcoin maxis like the Nakamoto Institute or some of us on Twitter.
Yeah. So, I mean, I'll state I'm a huge fan of the Mises Institute. I attended Mises University multiple times. I treat it as my actual alma mater. I have a degree from the University of Texas, but it's my, Mises Institute certificates that I really hold dear, and where I got my real education that brought me to where I am today. So I owe a lot to the Mises Institute, and I highly recommend it as a resource to any Bitcoiner of any whether you're new or old or whatever. It's there's always something more you can learn by digging into the archives of the great Austrian tradition. With that being said, I would basically generally chalk it up to a generational gap, where newer generations, by sort of definition, Bitcoiners are people who were much more interested in taking on technical solutions, just technology in general for various things, and we have a much more digital native life, and that makes it much more much easier to reason about Bitcoin. I also think that the Mises Institute, broadly speaking, its mission has to do with the Austrian tradition as a whole. And for those who know a thing or two about Austrian economics, the study of praxeology, the study of human action, it's not dependent on the empirics. So it's the free market will choose whatever the best money is, and that's great. To actually study economic theory does not demand of you to choose what that is. It can help you reason about what the best money might be, but it does not itself, make particular predictions. It does not, you don't even need to mention the concept of precious metals or Bitcoin or anything like that to reason about money in the Austrian tradition. And then what you do is you go out into the real world and look at what people are doing, and you apply the knowledge you have to what people are doing to explain what it is that's going on. And there's that generational gap. The old school people, for good reason, were gold bugs. I think it's a bit of a losing proposition now. And, one could argue that it was kind of always a losing proposition, but it was a very principled and, kind of, as a good ethical position to have previously. And they're wedded to that. And I think a lot of the notions of money also got wedded to various properties of gold, its physicality and stuff like that, to the detriment of being able to think better in the abstract about Bitcoin. So I think it was just there wasn't as much need for that, and it's not a not that the Nakamoto Institute is, but the Mises Institute is not an organization that puts out policy prescriptions. They're just trying to promote economic theory and good history and stuff like that. And so there isn't as much of a need to say, it's like, okay, now everyone, and if you go look, they don't explicitly go say, hey, you should go invest in gold. They just look at the history of money and talk about money. It's like, this is why gold, is kind of why it had its good run and why people are into it today. And so, I think it's mostly the generational gap more than anything.
Yeah, that makes sense to me. Let's talk about the Nakamoto Institute as well. First, I guess for people that may not know what it is, can you explain what it is? And two, can you explain your midterm and long-term vision for the Nakamoto Institute?
Yes. So the Satoshi Nakamoto Institute is a nonprofit organization dedicated to advancing and preserving Bitcoin knowledge, whether it's the economics, the technology, the history. And this started actually over a decade ago now. So in 2013, when I was still in college and studying Austrian economics, getting super into Bitcoin, and at the time there were people who wanted to whitewash the sort of libertarian and cypherpunk ethos that had kind of surrounded Bitcoin, because Bitcoin basically came out of that. And I didn't like that because I was reading this stuff. I was getting opened up to a lot of the literature that maybe I had heard about it before, but didn't really piece it together within a good libertarian and sound money worldview. And when I did, I was blown away by the amazing ideas being shared by Nick Szabo and Timothy May and Hal Finney and all the names people know now. And these, I wanted to make sure that these were kept around. I didn't want them, lost to history, especially not to some, Silicon Valley guys or New York guys who are ready to, bend over to the feds, in 2013 of all times to to try to make Bitcoin, more friendly. When it's like understanding the Austrian tradition, understanding the cypherpunk tradition, et cetera, et cetera. That helps us make better sense of what Bitcoin is in the first place. And I thought that was super important. And so I started a website with some friends to showcase these historical ideas, to show these sort of traditions from which Bitcoin sprang, as well as share the public writings of Satoshi. So people had kind of one place they could go to see all of those, different comments that he had about different things. While I don't treat him as gospel, I think that they're very lucid and informative and brilliant, frankly. So always a pleasure to go back and read some of his comments. A place to share that, and then we were also doing a lot of sort of early economic analysis from an Austrian perspective, and so the Nakamoto Institute was also a place that we could share this, and so it's existed. Sharing that stuff. It's been in mostly dormancy for the past few years, but I recently have begun to revitalize it, turn it into a formal nonprofit, and that's where we are today. And you asked about the mid to long term. So midterm, I basically think that there's a lot of content, especially since things were a little more dormant, that have come out that I think are timeless. The Nakamoto Institute is all about sharing timeless knowledge. So, getting more content that has been written over the years onto the website so that they have a more permanent home, so they do not get lost to history. That's going to be a big aspect. And then another side of that is accessibility. So I want the content to be as accessible globally as possible. And this means, a multitude of things. First, it means, in as many languages as possible. Not everyone speaks English, but that doesn't mean that they shouldn't be able to read Nick Szabo. So, one of my goals midterm is to get as much of the content into as many languages as possible, so that people around the world can learn from these very important intellectual traditions and really come to appreciate the power of Bitcoin and the sort of gift that we have here. And another side of that is, accessible in the sense of, I would love to move things away from just being online and also having, physical materials, physical events and such, so that people have more ways to get acquainted with these ideas and participate in this grand intellectual discussion and economic juggernaut. As far as the long term goes, the biggest thing that I think about is the fact that we're sitting here, we're talking on the Bitcoin frontier, we're listening to the Bitcoin frontier, we're excited by these ideas, we're running our own nodes, we're holding our own keys, and so on and so forth. But that's just us. And Bitcoin is not just us. Bitcoin is meant to be global money, and not just today, but also tomorrow, and not just tomorrow, but many years into the future. And so it's important that this knowledge does not end with us. And so long term, my hope is that the Nakamoto Institute can be an institution that is able to span this kind of time and think about how to bring these ideas to new Bitcoiners, not just today, but also the new Bitcoiners of every generation. Every day I see more Bitcoin babies being born. Each one of those, they didn't come into the world understanding hard forks and soft forks. They didn't understand key management. They don't even know what a private key is. And they have to be taught these things.
In this frontier moment, Bitstein is talking about the Nakamoto Institute. When I first began trying to understand Bitcoin, I came across a post on the Nakamoto Institute titled, "I'm hoarding Bitcoins and no, you can't have any." This was back in 2017 when the price of Bitcoin went from $3,000 in September to $19,000 near the end of 2017. I remember being very fascinated by the number go up technology, but I was still extremely skeptical. I thought the technology was interesting, but it seemed too slow and nobody was spending their Bitcoin, so it had to be a bubble, right? But then I recognized that money is only valuable because people want to hold it. Hoarders give Bitcoin value, as the post pointed out. It made me question my assumption that Bitcoin was a bubble. In fact, it made me question or consider that Bitcoin was the one monetary asset that's actually not a bubble. And now back to Bitstein.
I would like to see the Nakamoto Institute become a long-term institution that represents, an intellectual engine that is taking in this information, spreading it to the world, and also adding to it over time, so that we can always develop a fuller understanding of Bitcoin and not take it for granted, and make sure that the nodes don't stop running when we die, and the keys don't get lost, and so on and so forth. So that's kind of my vision. And you didn't ask, but short term, a big thing we're trying to do at the moment is a redesign. The website still basically looks like it did when I made it in 2013. It was my very first web application I ever made, and to me, it just shows. And it's served its purpose well. But with this in mind, I think Bitcoin is growing to it's on the global stage now, in so many ways. If anything, some of the government actions that people get upset about, at the same time, it's validating in the sense the Starship Troopers meme of it's afraid. We're on the stage now. Everyone knows about Bitcoin in some way, and with that, there's more people looking. It means every new hype cycle is going to have a bigger cohort of entrants coming in and asking about what is Bitcoin, what is money, how does this work, et cetera, et cetera. And the ideas on the Nakamoto Institute, to me, are some of the most important issues and ideas for the 21st century. And with that, I think that the ideas demand the respect that they deserve. And so I want to see a more beautiful Satoshi Nakamoto Institute that gives that proper gravitas to these ideas, so that when people are reading Nick Szabo, they know that this is stuff that you should stick with you. You should really take this seriously. And so we are currently doing a fundraiser to help pay for a redesign. People can go see our new logo and get a feel for the look that we're trying to achieve. Maybe we can share that in the show notes. But that's like the short term is getting things ready to embark on this continued mission to keep Bitcoin knowledge alive and thriving for generations to come.
Yeah, I love it. I remember discovering the Nakamoto Institute in 2017 and reading the articles that you guys put together and the pieces that you guys compiled. I was like, this makes a lot of sense, but this is just some random website on the internet, and I don't know who any of these people are, and it looks kind of sketchy, but it makes a lot of sense. So I'm happy to hear that it might get a redesign soon. How can people support that? Is there a place to go? Do they just go to the Nakamoto Institute?
Yeah, you can visit nakamotoinstitute.org. And there's a page on there. You should find the link in the footer, I think, but there's a page for getting involved. Maybe we can add that to the show notes directly. Basically, the main ways that people can get involved today is first by reading and sharing, but also by working on code. So our website is open source, and I highly encourage anyone who's proficient with Python and JavaScript to come show up on GitHub and come see how you can help improve the code base. Then there's the translation efforts. So people can find links to how to join a translation community, or just how to submit translations in general, so that we can expand the content library more globally. and then donate. So, we are a nonprofit. So by donating, and it's tax deductible for U.S. citizens. So when you donate to us, it gives us the resources we need to go above and beyond what we would otherwise be able to do on our own savings. So those are the best ways. And yeah, like I said, we can share some links, and you can also please get in contact with us if you have any ideas of content you like to see, and ideas that you have. We're very open to any and all suggestions.
I love it. Well, it's definitely a worthy cause. Before you drop, I do have a couple more questions that I wanted to kind of run by you if you have time. But
yeah, please.
One is the models. Recently, I think this has been a pretty hot, funny conversation. We've had like the stock to flow model, which I believe started in like 2019. And now this new one, the power law model, or it may have been around for a while, but it's kind of come up again, the power law model. How do you think about these models, and how do you think about like the future price of Bitcoin?
Yeah, well, I have a history with S2F. I was a big promoter of it. It was high octane meme fuel during the 2020 bull market. And unfortunately, like it got very noisy because there's obviously, as a promoter of Austrian economics, I can quickly explain to you all of the difficulties of the problems with even just considering the idea of quantitative modeling for any economic system. But stock to flow, is a fun grug brain model, and it actually, honestly, it held up pretty well for quite a while until certain bigger sort of geopolitical and what was the I'm blanking on not FTX. What was the other Three Arrows and all of them? They when those started crashing down, it really put an outsized effect on things. And we'll never have the counterfactual. This is part of the problem. One of the many problems with quantitative modeling is you never actually have the counterfactual. So would we have actually gone to 100,000 if those things hadn't happened? I have no clue. I am not going to defend continued use of quantitative modeling for Bitcoin, but I do think that it worked as great meme fuel. And I also never recommended people trade on these things as much as use them as fun memes and or just intellectual bait. So the entire time that I had any interest in it, a lot of it was driven by the qualitative ideas of stock to flow, with the quantitative thing just being like, it's like, I don't know, when you put it on a graph, it works really well. And you could say, well, there's the rainbow. It's like, cool. Well, I like this one. But I still think that the qualitative idea of stock to flow is an incredibly important idea to understand in monetary economics and in monetary competition. And so I don't think that should be thrown out the window, no matter what one thinks about the quantitative modeling. The qualitative model is, there's a lot that we can discern about how people act with regards to a monetary good, depending on what their expectations of the future will be, necessarily based on the currency. If you know that 5% of your money is going to go away versus 2% every year, you're going to act very differently on certain dimensions with that. And if you take 2% and you compare that to 0%, well, with 2%, you lose half your wealth in something like 36 years. 0%, you don't. And so that alone makes it, a priori, a better savings vehicle. All things being equal, it makes it better for savings. And so if monetary competition is how I think, based on the competition for reserve demand of the asset, of the thing that people want to hold on for the long haul, then that makes a huge difference. And so I don't think that those kinds of numbers of just the numbers that represent that qualitative idea of how scarce a good is should be underrated as a factor in what drives monetization of a good. And so with that, I think that it's an incredibly important concept. You can read about it in the Bitcoin Standard, which of course came out before the stock to flow model. The model was kind of making a simplistic model based on what had been read in that book. So if you want just the pure qualitative one, that's what we were talking about before anyone made any charts. And I highly recommend that. As far as the quantitative stuff, I had fun with it last time, but I think as we all learn, you should stay humble and stack sats. And I did what stacking I could, but it's hard to stay humble in the bull runs, and we always need to learn. And so I think it's important to stick to the fundamentals, which has also been a big motivating factor in wanting to get back into focusing on the Nakamoto Institute, because the hype cycles come and go, but Bitcoin is here forever. And so I'm much more interested in the fundamentals, and I highly recommend that people focus on that instead of coming up with notions of physics envy within the economic science, which is effectively, as far as I can tell, what things like the power law is. So at least stock to flow was quantitatively modeling a qualitative topic that we talk about in economics, whereas the power law, from what I understand about it, it's effectively trying to imagine the economic system as a physical system, which is not. It's patently absurd for anyone who's read even a paragraph of Ludwig von Mises. So I implore people to renounce physics envy and learn true economic science by studying the Austrian tradition and thinking about money from the action of individual humans rather than whatever it is the power law guys think they're tapping into.
Yeah. What do you think is like the end game for Bitcoin? Like some people say Bitcoin is digital gold, where maybe it taps out at $10 trillion market cap, $15 trillion market cap. Maybe it one day becomes multiples of that. Maybe it's, infinity divided by 21 million. Like, how do you think about the total addressable market for Bitcoin over, the next 20, 50 years?
I think that it's boundless ultimately. Any of these metaphors like digital gold, they always have their trade-offs. And that's part of the problem of metaphors. So this is also why it's important. Just how do we go back and think fundamentally about just the nature of money from a human action perspective? We get into all the different resources for that kind of perspective, but I think that's important because it helps us stay grounded in just what it is that money actually solves, which I would argue is effectively uncertainty of the future. So by having a good that will be accepted in the most amount of places through, on dimensions of both time and space, you can take it anywhere, you can move it anywhere at any time, et cetera, the more that you can hit all of those things, the more certain you can be about the future, knowing that you'll be able to get by, despite what might be occurring in the world. And so that's why we have money in the first place. And thinking like that, that's an addressable market that never stops growing. And in fact, the better money you have, the more that market grows, because it allows for a better division of labor, which means a better, productive output, which means more marginal goods, which means an increase in wealth for all, which means, and so on and so forth, such that you keep holding it, and now it's worth more and more, every year. That's part of why it's such a great savings vehicle, is because you can rely on it to be a growing economy, and there's no like inherent reason why that growth should have to stop. Now, a lot of people think about economic growth and they think, oh, it has to come to an end, because they're thinking in terms of the fiat growth, which is fake growth. So it's like, you're growing beyond anything that's actually been produced. You're just pretending like you have more money. You're pretending like you have more savings, and things come to a halt. And you have a boom and a bust and all of that. But with the sound money, it always grows, or at least rather, it doesn't necessarily always grow. You can have, if a big, blight comes in and there's some kind of famine, I mean, things in certain locations will cease production for a bit. But in the sort of cosmological sense of things, there's no inherent reason why it has to stop growing. People can always find new ways to do things. And so with that, Bitcoin will always be growing. And so, and I think by focusing on just those fundamentals of money, it also doesn't restrict you to thinking about it in a very particular way. Because if you stick to the gold narrative, then you might internalize some of the limitations of gold that don't have to exist anymore, such as the fact that Bitcoin is programmable. So it's like, yes, it's digital gold, but gold doesn't have multi-sig, for instance. And I think that that's a fundamental breakthrough in the history of the world, to have multi-sig. And, so if you're just thinking digital gold, you might not even really think about, well, what does that open up for us? And what does that mean for the kinds of things that money can be used for? I would caution against taking on specific metaphors, and I actually kind of shy away from. I try at least to shy away from metaphors when thinking about economics, because of this fact. It's like we want to think about the world as it really is, rather than get sort of tricked by our own, linguistic limitations and such.
Yeah, no, I think that's definitely a great point. Well, Bitstein, I really enjoyed this. I appreciate you taking the time to sit down with me and talk about this. Any final closing thoughts?
No, you can follow me on Twitter, Bitstein, Bitstein. You can find me on Nostr. You can find the Nakamoto Institute on Twitter at Nakamoto Inst, INST, or on Nostr as well. And visit us at nakamotoinstitute.org. And like I said, get in touch and get involved. There's a lot of people who need to learn about Bitcoin now and in the future. So let's get to it.
Awesome. Well, thanks again, Bitstein. And yes, everyone should definitely get involved and check out the Nakamoto Institute if they haven't already.